have on board Rajiv Kaul, who is the Executive Vice Chairman and Wholetime Director, as well as CEO of CMS Infosystems, as well as Pankaj Khandelwal, the CFO of CMS Infosystems as well. So, surely, thank you so much, gentlemen, for joining in with us on the show. And, Mr. Rajiv, I'm actually going to start with you. If you could talk to us about the company and the timing of the IPO as well. Why are you seeking an IPO at this time?
So we are a leading B2B outsourcing services provider. We work primarily with banks and financial institutions. What we have done is we've created two types of businesses. One is our logistics and risk management business, where we handle cash management for banks. And we are established ourselves as a clear market leader in the country, and also a very large company in the global arena, given the number of points we manage. We have a fantastic network, which covers almost 15,000 PIN codes, is present in every state, and touches almost 130,000 points every day. We have extended this market leadership to work with the banks in fast evolving technology areas like ATM managed services and remote monitoring services. So we're a unique platform. We have a very strong logistics platform, on top of which we have built a very good technology solutions offering. And the end purpose is to help banks serve their consumers and customers better and more efficient, and also give them a reach which they would find very expensive to do on their own. To your question, the second question on the timing of the IPO, I think companies, there is no right and wrong time for a company to go public. I think the right thing to do is to make sure that you're ready to take on the responsibilities of being a publicly limited company. You should have a fairly track record, which is very strong and consistent growth. And more importantly, you should be able to have very strong view of the growth and forecastability and predictability of your earnings going forward. I think those are all the tick marks we feel about a company in our evolution. We have been a privately held company for almost 12 years, and we have been preparing for quite some time to make sure that we build our business in terms of resilience, in terms of scale, in terms of balance sheet strength, to be able to go public and to drive a future wave of growth.
Right. Mr. Pankaj, just coming to you in terms of, I want to know about the fund and, how are you raising the funds, and how much of this is actually via the OFS route is what I want to know, as well as, in terms of your shareholding, what is the shareholding going to be looking like post the listing as well?
So this is a OFS by our promoter, Sion Investment Holding, which is a affiliate of Baring Asia. Baring Asia is a private equity firm having AUM of around $27 billion, 1,100 crore rupees of the IPO. And funds will be, after this, they are diluting a stake of around 35% if I will take on the 216 rupees valuation. And after that, we expect around 65% will be the stake of the promoter.
Mr. Rajiv, just coming back to you, I want to understand in terms of the market share you actually enjoy for the key services that you are providing, and which are your key customers as well, if you could give us some highlight on that.
So we have got the three vertical businesses I talked about. There's a platform business on cash management, we have ATM managed services, and we have the remote monitoring business. Our customers are almost every bank in the country works with CMS. You take the largest public sector banks to the small private banks, we work with across the whole spectrum. In addition to this, we also work with almost 2,000 retail end customers on behalf of the banks for our retail cash management business, where our customers will vary from the largest e-commerce chains to the large format organized retail, insurance companies, NBFCs, for whom all we handle the whole process of getting the cash back into the bank, getting processed and everything on a daily basis. Our cash management business, where we are a clear market leader, there are three sub-verticals. The ATM cash management, which is the largest business, we handle almost 66,000 ATMs. On the outsource market, this is more than a 41% market share. But if you look at the overall number of ATMs in the country, because a lot of them are still done in-house by the banks, our market share is close to about 25-26%. In retail, which is a fast emerging area, and I think it has a great tailwind for us over the next 10 to 20 years as India formalizes and moves more and more to organized retail and e-commerce, that becomes a big revenue driver and big growth driver for our company. And that's a market where we have close to 36% market share. we have entered the ATM managed services vertical over the last 5 years, where we do everything from automation for banks to all the way to running software for the bank ATMs. In fact, we are the largest in ATM multi-vendor software in the country.
Mr. Rajiv, actually, I'm just going to continue with you as well. I just want to know in terms of disruption, from players like Paytm and Google Pay. So what is the impact that you actually see coming on by this disruption?
So when you think of any sector, any business, the risk of disruption is from across, from any element you can be disrupted. So therefore, what we've done is, first of all, built a fairly unique network and reach, which has been very difficult for anybody else to replicate in the country. That network and reach, which provides, if you think of all the banks in India, they serve almost 900 million bank accounts and bank account holders. That's a very deep set of customers, and to reach them in an effective, cost-effective manner, you need very strong partners who can do that for you, because it's not possible to keep setting up a branch in every location. It's too expensive to run. And therefore, ATMs and micro ATMs are a channel which banks use to get to their customers and give them better quality service. So we think there is that network depth and penetration we are building and keep expanding every year is a fantastic moat, which helps us prevent any risk of disruption. But having said that, when you think about what happened since demonetization, various forms of commerce are getting disrupted. Before demonetization, you had mobile wallets. The mobile wallets got disrupted by UPI. And I don't know what will disrupt UPI going forward. But for us, it was very important to have multiple lines of businesses and diversify our businesses. So from cash management, we went to managed services into remote monitoring. And if you look at our revenue trajectory and our profit trajectory, we've had very consistent, strong growth on both the top line and bottom line, despite any of these external factors, which again points to the resilience of the company, its moat and its distribution network, and also the variety of services we offer to banks. But most importantly, we offer them in a very tight-knit, integrated manner so that the banks can actually focus on their core business and we are able to take care of the back end for them.
Right, and lastly, I just want to understand in terms of the ATM penetration, what is the scope of growth over there, and where do you see, what geographies do you see it geographically, where do you see it coming from?
If you look at our FY21 revenues on 1,300 crores, 900 crore revenue came from the cash management side, and 365 crore revenue came from the managed services side. Now, the 365 crore vertical has an order book of more than 1,500 crores today. That order book is obviously spread over 6 or 7 years, but if you just divide it, just simple mathematics, divide that by 6 or 7 years, you get a number. If you take the number, add to the 365 crores, you can sort of imagine the size of the business growing rapidly in the immediate term, because that order book has been secured. We are in the process of executing it. When you look at our remote monitoring business, this was a zero revenue in FY21, but we have one in FY22. We have one on order book of 400 crores, which we are in the process of executing. There's again an order book of roughly over a period of 5 years, so 400 by 5, 80 crore. So in the near term, we should get to that sort of a number. Now coming back to our cash management business, where we are the clear market leader. The cash management sector, as per Frost & Sullivan, is roughly at 2,800 crore market today, expected to go to 8,000 crores in the next 6 years. So it's almost a 20% revenue CAGR opportunity. Now, we hope that we will continue to work hard and work the way we've done and therefore grow in line or ahead of the market in the coming years. But it's a larger revenue, and therefore the growth rate will be relatively lower. Even if it grows at 20%, let's assume, it will still be lesser compared to the other two businesses because they're coming from a smaller base. So I think our, 6 years ago, it was 100% revenue from cash management. Today in FY21, the revenue from cash management is less than 68%. We would see the revenue contribution of cash management start lowering down, but not too dramatically, because we do foresee a very large market opportunity and growth opportunity out there.
Okay, thank you so much, Mr. Rajiv, as well as Mr. Pankaj, for joining in with us on the show and giving us an insight about the company.